Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Replimune Group, Inc. quarterly report. Replimune Group, Inc. is a clinical-stage biotechnology company focused on developing and commercializing oncolytic immunotherapies for cancer treatment. The company's proprietary product candidates are designed to activate the immune system against cancer cells. The company offers several key products and services in its portfolio. Its lead product candidate, Arpone, is a selectively replicating version of HSV-1 that expresses GAL-VGPR and human GM-CSF for treating solid tumors. Additionally, Replimune is developing two other product candidates, R-Pitwo, which expresses an anti-CTL-aminase 4 antibody-like protein to block immune response inhibition, and RP3, which stimulates T cells through the expression of immune-activating proteins. Overall, Replimune Group, Inc.'s business involves the development and commercialization of oncolytic immunotherapies for cancer treatment. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to significantly drop. The stock price of Replimune Group, Inc. has likely dropped due to various market and company-specific factors. One possible reason is the failure of clinical trials for their lead product candidate, Arpone. If the trial results are not as expected, or if there are significant setbacks in the development process, investors may lose confidence in the company's prospects, leading to a decline in stock price. Another potential cause could be increased competition from other biotechnology companies working on similar products. If Replimune Group, Inc.'s product is not differentiated enough from its competitors, it may struggle to gain market share and attract investors, causing the stock price to drop. Additionally, changes in regulatory policies or reimbursement rates can also impact a company's stock price. If there are any developments that make it more difficult for Replimune Group, Inc.'s product to be approved or reimbursed by payers, this could lead to a decline in investor confidence and a subsequent drop in stock price. Lastly, macroeconomic factors such as market volatility, interest rates, and overall economic conditions can also contribute to a decline in stock price. If the broader market is experiencing a downturn, Replimune Group, Inc.'s stock may be affected even if the company's fundamentals remain strong. Replimune Group, Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Replimune Group, Inc. trades at a lower price-to-book ratio of 1.37 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through various financial metrics. One key factor is the exercise of pre-funded warrants, which contributed significantly to revenue growth in 2025. Additionally, the issuance of common stock through ATM sales also had a substantial impact on revenue. Another significant driver of revenue growth is the vesting of restricted stock units, RSUs, which resulted in substantial increases in revenue for both 2025 periods. Furthermore, net product revenue growth and payments from Roche have been notable contributors to revenue growth. On the other hand, royalty payments to Amgen on products that infringe their patents can lead to a decline in revenue. These financial metrics provide valuable insights into the factors driving revenue growth or decline for a company. By analyzing these key drivers, stakeholders can better understand the underlying trends and make informed decisions about future investments or strategies. Net income and profit margins experienced fluctuations in the given periods. For the 3 months ended December 31, 2025, net income decreased from a loss of $20.6 million to a loss of $23.1 million. However, for the 9 months ended December 31, 2025, net income increased from a loss of $56.3 million to a loss of $64.9 million. The lack of available data on profit margins for the specified periods makes it challenging to draw definitive conclusions. Nevertheless, the company's inability to generate revenue in the quarter suggests that its profit margins are likely zero or negative. The reasons behind these changes can be attributed to increased research and development expenses, primarily related to the development of Arpone, vusilimogene odorperpec, in combination with nivolumab for advanced melanoma. Additionally, selling, general, and administrative expenses also rose due to personnel costs, professional fees, travel expenses, and facility-related expenses. The company's financial performance indicates a concerning trend of negative operating cash flow. According to the provided data, the net cash used in operating activities has been steadily increasing over the past 2 years, with a significant jump from -$138,519 in 2024 to -$224,183 in 2025. This suggests that the company is struggling to generate sufficient cash from its core operations, resulting in a substantial outflow of funds. The negative operating cash flow raises concerns about the company's ability to sustain its business and invest in growth initiatives. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, long-term debt increased by $1,251 from $46,377 to $47,628. However, as of December 31, 2025, the total debt level decreased to $47.6 million net of discount, compared to $46.4 million net of discount in March 2025. In terms of interest expenses, there has been a notable decrease. Interest expense on debt obligations dropped by $115,000, minus 2.7%, in 2025 compared to 2024. Furthermore, for the 3 months ended December 31, 2025, interest expenses were $1.4 million, while for the 9 months ended December 31, 2025, they were $4.8 million. However, a slight increase was observed in the subsequent period, with interest expenses reaching $1.5 million for the 3 months and $4.4 million for the 9 months. Despite these fluctuations, it is clear that the company has made efforts to reduce its debt level and interest expenses over time. The decrease in long-term debt and interest expenses suggests a positive trend towards financial stability. Management's outlook for the company is cautious, with expectations of continued operating losses in the foreseeable future. To finance its future needs, the company plans to explore various options, including equity offerings and debt financings. This strategy reflects the company's focus on investing in research and development to bring its product candidates to market. The company's expansion into multiple indications has led to increased personnel-related costs, which is a significant expense for the business. Despite these challenges, management is confident that the company has sufficient liquidity to continue operations. However, this situation highlights the need for the company to generate revenue from commercialized products in order to sustain its growth and profitability. That concludes the financial summary for Replimune Group, Inc. Feel free to comment below, and I will be happy to answer them when possible.